Hi everyone, in this video I'm going to do a brief review of Peloton's fiscal year 2023 first quarter results. I'm also going to answer the question if the stock is a buy after these earnings results. So Peloton's recovery is making progress. Remember, the company thrived at the pandemic's onset when gyms were closed and we were spending more time locked down at home. Orders for its products, in-home exercise equipment surged. Management thought the good times would never end. They invested in this massive expansion campaign, and then when gyms reopened and economies reopened, customer demand crashed. And so now they're trying to right size the business, fix those mistakes that were made at the earlier stages of the pandemic. And here's what's going on. Overall revenue decreased by 23% in the first quarter to 617 million. The net loss of 409 million was bigger than the net loss of 376 million in the same quarter last year. The cash outflow of 246 million was an improvement from the cash outflow of 652 million in the same quarter last year. So the cash losses are improving. That's a significant improvement because that's one of the biggest risks for the company, is that it was losing so much cash every quarter that it was in danger of running out of money. But now that they're reducing that, it's very good to see, but they've got more work to do here. Connected fitness products, so this is sales of their exercise equipment, was down 59% from the same time last year. However, subscription revenue was up 36%. So if you don't know, when you buy a Peloton exercise bike, along with the bike, you buy a subscription to its interactive, recorded, and live classes. So that part of the business is doing well. Revenue was up 36%. The part of the business that's struggling is sales of new equipment. So capturing new customers is where Peloton is having difficulty with. It has no trouble keeping existing customers. It's done a marvelous job of keeping existing customers, right? Very few customers cancel their subscriptions with Peloton. So that part of the business is doing very well. Connected fitness subscriptions totaled 2.97 million. This was up from 2.49 million at the same time last year. Again, this part of the business is doing really well. No trouble there. Product gross margins were a negative 27%. This was down from positive 12% last year. This is due to the massive investments in capacity expansion that increased the company's cost of goods sold, which is bringing down the gross profit margin on these exercise equipment sales. So the company has 938 million in cash, which is a little bit dangerous when you consider that they lost 246 million in the most recent quarter. That's cutting it a little bit close. A few more quarters like that, and their cash balance is going to be dwindled. They do have $993 million of inventory as of September 30th. So the best thing for this company would be to sell more of that inventory, because those are products sitting on the shelf that if they were to sell it, that immediately turns into cash. And so that could help bring up its cash balance and also get rid of some of that inventory and also attract some subscription revenue. And so many good things will happen for Peloton if it can just boost up sales. That's the biggest issue for Peloton, and it's making progress here. Of course, two major initiatives the company undertook since the new CEO came on board was, number one, it signed a partnership with Amazon, where now Peloton's products are sold through Amazon. Prior to this, Peloton did not make any deals with third-party retailers. It was only selling direct to consumer, and so it was limiting its ability to make sales because it was focusing solely on direct to consumer sales. Now that it has a partnership with Amazon, it also signed a partnership with Dick's Sporting Goods. So now it has more avenues, more channels to sell its bikes, and hopefully that will boost sales, that will boost customer awareness of its products. Another major initiative the new CEO is undertaking is shifting the business model from mostly fixed expenses to mostly variable expenses. And when a business does this, when you have more variable expenses, the business is not as risky. The business is not as risky. Why is it not as risky? Because variable expenses go up and down based on sales. So when sales decrease, expenses decrease. When sales increase, expenses increase. So you don't have this situation when sales decrease, you still have high expenses leading to massive losses on the bottom line and massive cash outflow. When you have sales matched up with expenses, it's less risky because expenses will move down when sales move down. Of course, this also means that the business has less operating leverage because when sales go up, expenses will also go up, and so the profit expansion will not be as robust. Okay, so you're giving up some of the upside in order to protect some of the downside. And in Peloton's case, protecting the downside right now is much more important than the upside, right? Its existence is in jeopardy. The fact that it's losing this much cash from operations and it only has 900 million in cash. And so protecting the downside is a more prudent policy to implement for management than going after the upside, and I support that initiative. I commend management for taking on this tack. So is Peloton's stock a buy right now after these third quarter earnings results? And I would say not yet, not just yet. I would want to see this progress continue for maybe 1 or 2 more quarters before I would consider buying this stock. I want to see some of these inventories turn into cash. I want to see this cash outflow decrease significantly, and I want to see that spread between the cash outflow every quarter and the cash balance to be in a much more favorable position for Peloton. I don't like to see less than 4 quarters of cash on the balance sheet, right? This is too risky for my blood here, the way that they're so close to running out of cash. I don't like to see that. I don't like when a business is that close to running out of cash. Okay, so for investors interested in buying Peloton stock, wait a quarter or two. That would be more prudent. You'll get an opportunity to buy the stock then. All right, so that's all I've got for Peloton in this earnings update. If you've gained some value from this video, please hit the like and subscribe button. It'll help me make more videos like this one and support my channel. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.